Anytime a discussion about taxes arises, the terms standard deduction and itemized deductions are likely to come up. But what exactly do those terms mean? Today, we'll decipher those and figure it all out together. Let's start with what itemized deductions are. The general IRS rule says that your personal expenses aren't tax deductions. However, there are a few loopholes that the IRS has created that allow you to make deductions for very specific personal expenses. Most of these tax deductible expenses are lumped into what we call itemized deductions, and they're going to be reported on Schedule A of your Form 1040. In 2021, your itemized deductions are going to include the following personal expenses. First, there is your mortgage interest. So interest paid on your mortgage for your primary residence, sometimes your secondary residence too, but today we're focusing on primary. Second, we have your state and local taxes. You'll hear it sometimes abbreviated to SALT, so state and local taxes. So this is any taxes that you might pay on your real estate, on personal property, maybe some general sales tax. All of this is lumped together into one bucket that we call SALT, state and local taxes. This amount is capped at $10,000. Keep in mind that the rest of your itemized deductions aren't capped, but this specific portion of your itemized deductions is. That cap is $10,000. The next piece of your itemized deductions are your charitable contributions. This includes cash contributions made to churches, nonprofit organizations, any money you give away to a nonprofit organization. It also includes your non-cash. So think donations to Goodwill or ARC, when you clean out all of your garage or your crawl space, you donate all that old furniture and those lamps and all those clothes. Those are your non-cash charitable contributions, and that's also lumped into your itemized deductions. Finally, the last piece we have is your medical expenses. The key to this, you guys, or the caveat to your medical expenses, is that you're only allowed to deduct the amount of medical expenses that is over 7.5% of your adjusted gross income, also known as your AGI. So let's put this into numbers. Let's say your AGI is $100,000. That means your medical expense floor is $7,500, which means you're only allowed to deduct any medical expenses over $7,500. So for a lot of people, especially higher earners, your medical expenses don't come into play when you're itemizing deductions, and so you really rely on those other pieces to get your itemized deductions to a place where it's tax beneficial. So when you add all of these up, your mortgage interest, your state and local taxes, your charitable contributions, your medical expenses, when you total all those up, again, it's on Schedule A of your 1040, that total amount, if that amount exceeds your standard deduction, which we'll talk about in a second, then you benefit from taking the itemized deductions. If it's less than your standard deduction, you go ahead and you just take the standard deduction rather than those itemized amounts. So let's talk about what the standard deduction is. So the standard deduction was created as a way to simplify that benefit of taking a portion of your personal expenses without having to document and collect and keep all of the receipts and documentation for those amounts spent. So it's a way to take a certain amount, it's a predetermined amount that changes every year, and you take that standard deduction amount on your tax return rather than collecting all of those itemized deductions we just chatted about. You have a few options here. You can just take the standard deduction because it's easier and you don't want to mess with the itemized deductions. Or, like I stated a minute ago, you can add up all your itemized deductions and see which one is more beneficial. So for 2021, the standard deduction, if you're filing single or married filing separately, is $12,550. The standard deduction for married filing joint couples or married filing jointly is going to be $25,100. The standard deduction, if you're considered the head of household or HOH, is $18,800. For taxpayers who are considered aged or blind, you will also benefit from an additional standard deduction amount of $1,350. So these standard deduction amounts were increased substantially in 2018 with the Tax Cuts and Jobs Act. The reason for this substantial increase was a goal of being able to allow taxpayers to use the standard deduction and make their tax return easier to prepare and still get that significant benefit rather than having to itemize and collect all those documents like we mentioned when we were talking about itemized deductions. So there were a lot of taxpayers who used to itemize pre-2018 Tax Cuts and Jobs Act that no longer need to itemize because of this huge jump in the standard deduction amounts. A few important key concepts that you want to keep in mind that apply to both itemized deductions and standard deductions. In essence, this deduction, whether it's standard or itemized, what it does, you guys, is it decreases your taxable income on your tax return. It essentially makes a portion of your income that you earned throughout the year tax-free. So I like to use numbers, let's use them now. So let's say your AGI, your adjusted gross income, was $50,000 and you are single, so you get to take that standard deduction of $12,550. What that does is it knocks your taxable income down. You're not taxed on the full $50,000 of your adjusted gross income. You're now only going to be taxed on the $50,000 less the standard deduction amount of $12,550. Your taxable income bumps down to $37,450. This also means that if your adjusted gross income or your earned income from the year is less than your standard deduction, you're not going to have any taxes to pay that year. It's important to also remember that you can go back and forth between the itemized deductions and the standard deductions year after year. You're not locked into one or the other after you file your first tax return. So you can decide year after year which one is more beneficial to you in that given tax year. So obviously, you guys, the standard deduction is easier, right? There's no documentation. It's just the number the IRS tells you can deduct. Boom, it's in your tax return. However, the itemized deductions can sometimes lead to more benefit. So it oftentimes is worth that extra effort to collect those documents and collect that information to take your itemized deductions over your standard deduction. So those are kind of the pros and cons of each. In the end, although the increased standard deduction that came around in 2018 with the Tax Cuts and Jobs Act did result in less taxpayers needing to itemize anymore, they now take the standard deduction, it's often worth your effort to collect your itemized deductions and just make sure that they don't, in fact, exceed that standard deduction, right? Because it's not like if you add up all your itemized deductions, if the standard deduction is still more beneficial, you can take the standard deduction. It's not like you collected all your itemized deductions and now you have to take that lesser benefit. All right, so we always recommend that you do collect those itemized deductions and put them all together and figure out which one's more beneficial. This is especially true, you guys, if you have a mortgage, because mortgage interest usually makes up a big chunk of that itemized deduction amount. If you had significant medical expenses that's going to really increase your itemized deductions, or if you make significant charitable contributions. Those are the three buckets that typically decide whether or not you want to itemize or take that standard deduction. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly, highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.